When you choose to invest in a mutual fund, it is the fund manager along with other officials in the AMC who make the decision of what to buy and what to sell based on their research and analysis. They are perceived to have a comprehensive knowledge of the subject and have very valuable insight. Their goal is to deliver growth to the scheme that is above the interest rate and inflation rate. This justifies the risk that they take for investing. Some mutual fund managers, though, they take undue risks in the hope of helping their scheme. For example, more than 10 mutual fund schemes that invested in ILFS were caught off guard after it defaulted on its payments. Franklin Templeton shut down 6 debt schemes owing to liquidity concerns. And as many as 165 mutual fund schemes had exposure to DHFL, which was later downgraded. These are just some examples of mutual funds who have had trouble in the recent past. When such events take place, who faces the biggest inconvenience? It is you, the unit holder. This impacts your investments greatly, while the same pinch may not be felt by the AMC. Do you know some fund managers make more than 6 to 7 crores per year as salary to manage the fund? Kotak, ICICI and Nippon are just some companies that give out such huge salaries. Such was the landscape before May of 2021. On April 28th, SEBI has asked mutual funds to invest 20% of their salaries in their own schemes with a clear intention to protect the interests of the unit holders. This move will help align interests for both unit holders and the fund managers. The 20% too, just a threshold. Mutual funds are free to fix a higher threshold and there will be a lock-in of at least 3 years for these units. Steve Jobs once said, "Coming in and making recommendations while not owning the results may only deliver a fraction of the value it provides." He constantly stressed on having your skin in the game for your own product. Very similar to the age-long proverb, practice what you preach and preach what you practice. Time will only tell if this move ensures all fund managers and AMCs are fully invested and aware of the risks with their selection going forward. What it signals though is that fund managers will have a more vested approach towards their own scheme and exercise caution with our investments. Make sure to check out how Vivekam is able to pick better schemes based purely on the numbers. Thank you.